The PSE is just a few points below the 8,000 mark ahead of today's open, and many are wondering if the main index can also snap out of a 3-day losing streak. Well, to help us gauge the local bourse's odds today, I'm joined by Charlene Erica Reyes. She's an analyst at First Resource Management and Securities Corporation. Charlene, thanks for joining us. Now, look, Charlene, maybe it's because it's Ghost Month, but we've seen that the mood of the markets has been rather subdued, and we're also seeing these last-minute spikes and drops on the local benchmark. Trading volumes also thinner than 20-day averages also. Can you talk to us about the current mood on the markets and why there seems to be a sense of tepidness lately gripping the PSE?
Well, our index, we had already had a number of false breakouts at the 8,000 level. And I think the all-time high record of 8,137 is really a hard resistance to break right now, because even the corporate earnings and the expansion of our GDP were not enough to push it further up. But then this should not be taken negatively, of course, because it could be possible reasons why we're still holding on to 7,800 to the 8,000 level. But right now, what the market, we are currently in a consolidation phase. We have just entered the ghost month period. And right now, I think that the market participants are really waiting for a major catalyst. It's really the tax reform program, because it will not only boost investor confidence, it would also attract foreign investors, and it's also a big chunk of the infrastructure spending of the government.
Now, if tax reforms are also expected to impact not just consumer spending also, but we're also looking at it having a potential impact on corporates as well. If we're looking at that, I mean, when you take away the impetus of tax reforms on these corporates, does that mean that earnings perhaps are just a little bit soft when you look at earnings across the board with regards to some of these PSE-listed companies?
Relatively, yes. It's because it's really one of the major catalysts that everyone is waiting for. So I think it would push the index and even the sectors further if the approval of the tax reform would be passed.
Okay, there's a lot of activity in the gaming space recently, Charlene, particularly with some of the mid-sized players. Let's take a look at some one by one. So let's start off with let's see, PhilWeb here. Okay, PhilWeb's surge on Tuesday. They saw the stock actually surge on Tuesday on news that PAGCOR gave them provisional accreditation. Now, could this help PhilWeb turn around four straight quarters of losses? And if so, how soon do you think this impact might actually be for PhilWeb?
I think PhilWeb is really controversial stocks. Ever since 2016, they were really prone to the regulations and the statement of PAGCOR that they will not renew the license of PhilWeb. But then I think this is really an opportunity for PhilWeb to continue their operations. The provisional license that they have received is a step further to continue their operations. And this would maybe, I think that PhilWeb will have a gradual increase in their revenues as they recover from the incurred losses last 2016.
How soon do you think they might swing back into the black, given that we are on four straight quarters of losses for PhilWeb?
I think it would take them a long time. I'm seeing a gradual increase in PhilWeb, so I think it would take them a long time. But then I think it's up to the company itself. It's because currently we're seeing a growth in the gaming sector because of online gaming, and I think that would help them.
Now let's shift from online gaming towards I guess mainstream gaming, for lack of a better term. Let's move on to this other story: the possible team up of Leisure and Resorts World with Macau's Galaxy Casino and setting up yet another casino here in the Philippines. Of course, that stock was one of the best performers yesterday on the local bourse, but there have been concerns that perhaps the casino sector here might be oversaturated, or there might be overcrowding. Is this something that that needs to be taken into consideration when looking at this particular space, Charlene?
Yes, that's right. It might be somehow that a lot of casinos are entering right now, and PAGCOR has also approved at least, I think, 2 casinos, and we are already having so much in the market, sharing a high competition of casinos. But I think this would help with the tourism development. Although what I am concerned about here is that leisure resorts, more of the casinos, the revenues are coming mostly on VIP sales and not on the market of the tourism. So I think that would cause a slowdown with the revenues of the casinos, including other stocks. But then the gross gaming revenues, I don't think there would be a slowdown in the whole gross gaming revenues of the Philippines.
Now, we know leisure and resorts world, they're pivoting towards this also, and it's also coming at a time when we saw a significant drop in the revenues from their online gaming operations, particularly from First Cagayan. I mean, what does this do? I mean, given that you have these two particular, forces or drivers really impacting the stock, where do you think the stock's going to be heading, at least for the third quarter for leisure and resorts world?
I think it would continue its uptrend, but then I think there would be slight profit taking from investors. I think it would continue its consolidation period. But this is a big opportunity for them to compete with the big gaming casinos.
Okay. Now, despite the recent shakiness, Charlene, you're still upbeat on a handful of stocks, and one of them is a conglomerate, DMCI. And I'm interested in this particular stock too, because as we mentioned a while ago, holding sector really saw a bit of a significant downturn yesterday. They were one of the big drags on the local bourse. Now, what stands out for you with regards to DMCI? Why are you actually favoring this particular conglomerate out of the breadth of them all?
Well, with DMCI, it is one of those holding companies that reported strong corporate earnings with a core net income of increase of 21%. And then it was driven by their coal, property, and construction segment. In their subsidiary Semirara Rose, it is the big chunk of their revenues, mostly because of higher coal prices. And what I like most about TMCA is it's their construction business. They have already booked a 11.7 billion of worth of projects for the first half of the year, and a couple of those are for the infrastructure spending of the government. And then DMCA also is planning to put up a cement facility wherein this will cater their cement needs for properties and their construction business. In regards to their financials, profit margins are good. Gross profit margins are at 40%, and then net profit margins are at 30%. And then currently, the MCI is in a consolidation period right now, but I think it's still on an uptrend following its moving averages, and then its RSI is above 50. So I think there's a potential upside with the MCI.
Look, moving forward, DMCI also is targeting setting up its own cement plant. And you talk about possible overcrowding. There seems to be a lot of interest in the cement industry, despite the fact that we saw those, lackluster earnings from some of the listed cement firms here. Do you think that this is a good move for DMCI, given there's so much interest and there could be possible overcrowding in the cement space?
I think it's possible that they could enter the cement industry, although that's right, there is also negative sentiment in the cement industry. But I think the cement industry, the cement plant that they are pushing through is mostly for the benefit of their company, also for their revenues, because it's the use of their properties and their construction businesses.
Okay, now let's look at your other stock pick. You're also upbeat on Ayala Land, and you're joining a long list of admirers for this particular stock. When you look at Ayala Land, though, I mean, it is relatively pricey compared to most of its peers on the property space. You look at their forward PEs, actually, it's only SM Prime that's up there. A lot of analysts, though, believe that the premium attached to Ayala Land is justified. Do you agree with some of your peers who believe that that Ayala Land's premiums, at least, are a bit justified?
Yes, I also agree with that. That's why we chose also Ayala Land as our stock pick. As compared to SM, it's relatively undervalued with regards to SM, but then somehow high PE when you compare it to the others. But then they also have a 5-year average EPS growth of around 21%, so that compensates the higher PE ratio. And then right now they have allotting 46 billion for projects, estates in Visayas and Mindanao. And then they have just launched projects like in Cavite, a new central business district in Cavite. And then they are, in terms of charts, they are hovering around 41 to 43 pesos. I think there's also potential upside for Ayala Land, given that the real estate sector is also booming right now.
All right, interesting picks, of course, and we'll wait to see how Ayala Land actually reacts at the open. Charlene Erica Reyes again. Thanks again for joining us this morning on Starting Gate.